Hello and welcome to the November monthly update for Utilico Emerging Markets. I'm Jacqueline Broers, Deputy Portfolio Manager. This month, UEM's NAV total return decreased by 2.3%, outperforming the MSCI Emerging Markets Total Return Index, which was down by 2.6% in sterling terms. Global markets in November were dominated by one thing: the US election. The US market reacted positively to Trump's win, given how he now has a robust electoral base to implement his policies of trade, taxes, immigration and deregulation, all with the focus being primarily on driving the US domestic economy. The S&P 500 index subsequently reached an all-time high during the month, up by 5.7%, whilst the Dow Jones Industrial Average Index was up by 7.5% and the US dollar appreciated against sterling by 1.1%. However, question marks remain with regards to how expansionary Trump's fiscal policy will be and the magnitude of potential trade tariffs, especially with regards to China. The Hong Kong Hang Seng Index was therefore down by 4.4%, although the Shanghai Composite Index was up by 1.4% for the month, as the index has more domestic investors. With the prospects of a more buoyant US market, a stronger US dollar, a tighter federal policy, as well as higher tariffs, other emerging markets also came under pressure. Within ASEAN, Indonesia was down 6.1%, the Philippines market was down 7.4%, and Vietnam was down by 1.1%, also affected by additional uncertainty surrounding potential tariffs. India was down only marginally by 0.3% as it saw an improvement at the end of the month on the back of President Modi's BJP party winning a key state election of Maharashtra. In LATAM, the Mexican market continued to witness pressure, down by 1.7%, as Trump's threat of tariffs continues to be an overhang. The Brazilian Bovespa was also down by 3.1% as the long-awaited fiscal package to better balance the country's fiscal accounts was weaker than expected. As a result, the Brazilian real depreciated against sterling by 1.9%, with expectations of a rise in the Selic interest rate on the horizon. Argentina was the shining light in LATAM, with the market up by 22.2% on the back of continued positive sentiment tied to President Milei's policies and early indications of economic improvement. Within EMEA, Turkey was also up by 8.9%, recovering some of the lost ground earlier in the year. Within the UEM portfolio, there was one change to the top 30 holdings in November. Piraeus Port Authority, PPA, replaced Terna Energy. PPA, listed on the Athens Stock Exchange, owns the concession for Piraeus Port in Greece, operating container, cruise, coastal and car terminals. The portfolio had mixed share price performances in November. TAV Airports' share price was up by 19.1%, assisted by more positive market sentiment, whilst PPA's share price was up by 11.6%. Sunevision, the Hong Kong-listed data centre, was also up by 8%, as continues to benefit from increased demand for data centres on the back of a huge growth of AI. Aguas Andinas was also up by 6.9%, as the Chilian Water company finally received its long-awaited tariff increase. Share price weakness for the month was seen primarily with the Brazilian companies, on the back of the disappointing fiscal package that was announced. Serena, the renewable energy company, was impacted the hardest, down by 24.3%, suffering from being a small cap with low liquidity, alongside Horizon, which was down by 10%. Ocean Wilson's was also down by 11.2%, affected by the poor market sentiment and weaker Brazilian real. UEM's share price return was down 5.2% over the month, with the discount to NAV widening to 22%. UEM continued to buy back shares during the month. UEM also declared an increased second quarterly interim dividend of 2.325 pence per ordinary share in respect of the year ending 31st of March 2025, an uplift of 8.1% on the last quarter dividend. This will be paid on the 19th of December 2024. For more details, please do read UEM's November fact sheet. And wishing everyone a Merry Christmas and a Happy New Year.